Warren Buffett, one of the most adored investors in this world, has been admired for his unique ways of making investments while helping a lot of others know of the impact he could make. Let us hear it from the mastermind himself and try figuring out what makes his investment style superior to others. While we're at it, to make things fair, let us look at the $80 billion he sank into the housing market crash. What's the truth behind it? Welcome back everyone. Today's video is about Warren Buffett and his recent investments. We'll be looking into the recent moves he's made and also the updates and effects it has had on his own portfolio. Make sure you hit the like button, subscribe to this channel, and let us know in the comment section below the factor that makes you feel that Warren Buffett is really the OG of making investments. Let's get started. Warren Buffett is one of the most successful investors. The best investors have some form of a foundation when it comes to investing, and that will be their reason for success. In the case of Warren Buffett, these reasons are pure and traditional. Warren Buffett has already made his journey up to the mountain. This is also another reason why people look up to him and try learning from his experience. He can be called a veteran investor who has the knowledge of what is happening around him and what may happen over a period of time. If things go wrong, in other words, predictability. With experience, not only do you get blessed with some decision-making capabilities and confidence, but one other thing that comes into your life through experience is the ability to see the most probable cause or the most probable event that could happen in future. Not exactly seeing the future, but close to that, through the past experiences accumulated over the years. Of all the tips that he has given about money, he puts a lot of emphasis on one very important one. This is to never lose your money. Yes, we know this is a very basic tip and one need not be advised about this to know about it. However, the real application of this tip will be when the investor will know when to cut off and withdraw from such an investment where he's losing money. That perhaps is the real test and hence is rule number 1. Warren shared a letter to all the shareholders of Berkshire Hathaway in 2008 when he stated that there are a few key principles that one must pay attention to. One of the first ones here is to make sure they have a good look at the prices. One must be fully aware of the present prices and potential they may have. In other words, you need to target the stocks that are at low prices and have high earning potential. This will require you to conduct good research, and the research for this purpose will help you make better predictions without going wrong many times. Remember, you may make mistakes initially, and this is when you need to actively apply the first rule we told you. Don't rush into making these investments. It will only lead you to making mistakes and hence losing out on the money which you possibly could have saved. A lot of entrepreneurs suggest that you get into debt and use other people's money to work on establishments that you erect. Warren Buffett has different ideologies about it. He says that debt must always be avoided, and among these debts, he warns about the credit card debts the most. He says that if you're smart, you'll make money without having to get into debt. Now, whether you're smart or not, depending on the decisions you make and the choices you take up for your wallet. The high interest rates that these credit cards have sometimes reach up to 18 or even 20%. So this is something that bothers him a lot and is not sustainable for an individual in the long run. He also says that his company always keeps a cash equivalent of $20 billion at all times. He says that there are times when they keep even more at times. This statement is one of his annual reports that had raised a lot of eyebrows, as this was not common for a lot of investors. From what we can see from all of this, we can be sure that Warren Buffett has a pretty traditional approach to things. He also has a good vision, which helps him tread a long way without going through a lot of instabilities. His traditional approach to things helps him ensure that there are no drastic changes to what he does. Now that we know what fuels him and what he uses to fuel his company and investments, let's look a bit into the latest events that helped him generate more streams of revenue. It'll not be new for you if we tell you that Warren Buffett has not been a huge fan of real estate in the past. The truth is that despite the strong opinions against it, which we'll discuss further in this video, Warren Buffett has recently shown interest in the London property market and has decided to invest in a joint venture. The deal has been signed with a London-based estate agent, K&Co. The agent rebranded itself as the Berkshire Hathaway Home Services K&Co. and has expanded throughout London, making use of a fair number of acquisitions and joint ventures with a lot of other agencies. The firm has invested a huge sum into this market. There are 3 serving offices in total as of now, which will cover a lot of areas. The partner is said to contribute £47 million of equity funding. However, even though he's been right about a lot of such things, we would say that there are a few things that he may get wrong as well. Real estate investments are one such thing to which he has now made a comeback. On the other hand, if you continue to be stern and not check for yourself about how things are, you may really be missing out on a few important opportunities. The first reason why he was not so interested in this market for real estate is that it is too accurate in terms of prices. Though this sounds positive, he says that the chances of growth and profits are very less. Looking into his history, you'll notice that he's known for making investments that will fetch him a good profit in the future. In other words, he tends to invest in yet-to-grow companies that give him the advantage of making the most out of all the money he puts in. This is why he tends to not invest in real estate anymore. One thing that may be important for you to understand is the famous buy and hold strategy that has worked well in the case of real estate as well. So this is a good point that you must consider if you're looking forward to investing in real estate. So, if he was not at all interested, why did he make such a huge investment? The answer lies in the nature of joint ventures. The truth is that when it comes to joint ventures, there are many such advantages that pull them closer to the profits they've been intended to make. One of the biggest ones here is the fact that as little as £1,000 can be invested in a single project, thereby helping these investors to diversify. So, the profit that is made through investments in the residential property joint venture can be shared between the builder, developers, and in this case, Warren Buffett. Allow us to simplify it for you. If you choose a good venue for these investments, the money you receive from rent certainly be a very good amount. Warren has not mentioned the REITs or the other investment trust, which we think he would now be interested in, considering the latest joint venture deal. The reasons that Warren Buffett had in the past must not stop you from investing today. As much as there are problems with any form of investment, there are better sides to them. As far as real estate is concerned, you'll see that the major advantage you'll have is the presence of a tangible asset that could have multiple use cases for you to make money. The possibilities are endless: renting it out, selling it, or even using it for your business purposes. He has never opposed investing in real estate. He does not prefer having it for himself. And it made sense back then as it came from a person who had already built a company with the share prices crossing the $500,000 mark once or twice in its lifetime. His strategy is very simple and involves the least effort but maximum knowledge and patience. Do understand that there's a good difference between buying real estate and investing in it. As far as Buffett is concerned, he says that it does not make much sense to get into the business and become a landlord. This makes it a business and not an investment. This is what makes him feel wrong about the entire idea. It's a tough business. As a matter of fact, you need to know the right venue, the best times, and the best ways to get into the business. Stay tuned with us for all of our videos. Hit the like button and subscribe to this channel to learn more. We would love to educate you about the latest events happening all over the market. Let us end this video with a very famous investing tip from Warren Buffett himself. Invest in yourself to make each penny you invest count.